Hi student, good day. Today we start with chapter 8, Strategic Business Leader, Approaches to Governance. This is a specific approach according to rule-based and ethical-based approaches we will discuss today. So the chapter learning will be there from we compare rule-based versus principle-based, ethical-based, how we will explain them. We will discuss in details. Discuss the different model of organizational ownership that influence different government regimes, families, firms versus joint stock company based model and how they work in practice. Apply general principle of international corporate governance network ICGN code of the organizations. So this is our topic of discussion today. So very brief chapter. So small things are there just for your attention. Corporate governance. So first of all, what are the ownership model? So ownership of the shareholder, how they make a ownership model like their chairman, their shareholder, and their the hierarchy is there. Then approaches. So for business approaches, so they will make a rule-based approach or principle-based. Principle-based is just ethical-based, just according to what you think right, perfect for the principle of their rules. A country or the companies or best practices will follow is coming under the rule principle-based. Rule-based is there for the where they have a penalties, and if they don't fulfill some certain requirement, they will find penalties and they have to face a problem for that, which is example of USA in SOX is the Sarbanes-Oxley rules is applicable there for penalties. We will be discussed under governance code. There is OECD and ICGN codes are there. So students, you have to remember this flow, and it is easy to grasp. And then see rule-based and principle-based approaches. For the rule-based is a US example, and the principle-based is a UK is an example for this purpose. So rule-based approaches instills the court into law with the appropriate penalties and transgression. And then principle-based require the company to adhere and to the split the rather than the letter of the code. The company must either comply with the code of or explain why it is not through reports. UK model is a principle-based, although it's require a company to adhere according to their code of conduct for the UK law, their exchange requirement for the listing purpose. So they have mentioned the key points, what is the requirement for that. So choice of governance regime. So what are the choices are there? Decision to which approach of use to country can govern by the factors. So dominant ownership structure like a bank, family, or multiple shareholder, legal system and power of ability, government structure and policies, state of the economy, culture and the history, levels of capital inflows, comply or explain. So this is the UK Corporate Governance Code 2016 state about their rules and their principles, how it works. They have given a Marks and Spencer illustration, announced the board and senior management change. So on 10th March, they have announcement stated that the Lord Burns will stand down as chairman with effect from this date, that the Stuart Rose is an appointed executive chairman from the same date. The action meant that so and so CEO, chairman, and the allowing one individual to hold both positions, Mark and Spencer, would not be in compliance with the UK Corporate Governance Code. Furthermore, so also contravention of the code, the director had not fully consulted major shareholder in advance for this announcement. So this is the way how it happened, how they gave it. way of presentation. So in their corporate governance statement for the year ended 29 March, Marcus Peters stated that they had complied with all provisions of the code with exception of the two noted above point. When to explain non-compliance, a letter was also written to the shareholder dated so and so explaining in full the reason for the departure. So this is example of principle-based approach. So they which they don't appreciate, so they will make a highlight these areas. Argument in favor of rule-based approach and against a principle-based approach. This is the argument. Organization perspective, clarity in terms when company must do the rule are a legal requirement. Clarity shows existence of hence interpretation is required. Standardization for all companies. There is no choice for has to comply with the explaining binding requirement, criminal nature the work because if it is you are in USA, so there is a you are bound for that to abide by the rules. Wider stakeholders perspective, there are standardization, sanction, greater confidence in regulatory compliance. Argument against a rule-based approach and in favor of principle approach. So this is the argument like this. You can see once you understand the rule-based and the principle-based, then argument will quickly you will understand. Go through this argument. These are very easily you will understand. Wider perspective also there mentioned there. Sarban-Oxley, SOX is there. SOX is a rule-based approach to govern. SOX is externally detailed to carry out the full force of the law of the government protected by the government. SOX include the requirement of Security Exchange Commission, and then it is relevant to U.S. company directors, subsidiaries, U.S. listed companies, and all these things. Enron matter, most of student knows. So Enron, there is one of the US top 10 companies filed for Chapter 11 bankruptcy. The size of collapse and shock waves around the world. Enron spread through investor and board of directors, shaking confidence in the market and continued global economic prosperity. Enron perspective, you can Google it. You will see how it was a big problem happen in that time. SOX key points. So this is then this come into existence. SOX rules and regulation. So audit committee, auditor independence, auditor partner. What are the responsibility of internal control system and the increased financial disclosure, actual accuracy of financial statement must be watched by CEO and CFO, and then restriction on dealing. This area was very broadly. They have highlighted this area and they control this area and they held responsible CFO for any type of misstatement or misrepresentation. The key effects of SOX, personal liability. So this is why professional indemnity is a must for all chartered accountants. So for the mismanagement and criminal punishment, improved communication, and then improved in public relation. So improved governance through audit committees. So negative reaction to SOX, doubling the of audit fees cost to organization, onerous documentation, reduced flexibility, reduced risk, and then limited impact. These all are the examples of their control. Negative reaction to SOX. Test your understanding. One is there for your wider understanding of the concept. Divergence governance. So the committees and code of practices in UK are implemented through the Financial Conduct Authority, and then corporate governance also impacts on the other type of organizations such as non-government organizations, smaller limited company, US companies, and private sectors. NGOs are also example for your more clarity. So governance issue, just to have a read. The key reasons for this area: dominant, silent, and then anti-industry. Governance structure: the family structure. Benefit that arise. Problem includes, just students go through. I'll get back to you. Okay, student, the insider dominated structure. Close relationships suggest benefit, including agency problem is to reduce easier to establish links between owners and manager, greater access to potentially lower cost of capital. The problem are included in this method: lack of minority shareholder protection, misuse of power, market does not decide, trade to reluctant until forced to develop, reluctance of large independent shareholder to invest. National differences, just student go through, this is for your reading. Now corporate governance and European Union, their differences, their definitions, go through these areas. Corporate governance in Commonwealth countries. Corporate governance in Japan. International convergence. The competitiveness of nation and preoccupation of all governments. Harmonization. The two organizations are published corporate governance code intends to apply a multiple national jurisdiction. These are OECD, and it is also keep testing in the exam. Familiarize yourself, student. Corporate governance for codes, registration, OECD principle of corporate governance, and ICGN statement on global corporate governance. This is the main area. What does it stand for? Go through. This is a paragraph. The objective of OECD principles. These are the objectives. OECD principles were updated and published 2004. These are OECD principles. ICGN network. So those students who are continuously watching my videos and commenting all my videos with your good feedback, so they can qualify for pass card. So they just message me in this video. I will provide them this SBL pass card as a token of appreciation. But the condition is that they watch all videos, comment every video of my in my playlist of this SBL topic. And they just message me. I will send them a pass card PDF copy. The content of ICGN principle, their limitations. This is the chapter summary. So corporate governance approaches, rule-based, principle-based. Actually, these are the key area of the chapter. In impact of ownership, governance, rule-based. Remember, this is for US Sarbanes-Oxley key points, and you can combine code. That's all. Then, if you are done with this area, you have covered that's all understanding. Thank you. See you in next chapter.